Hey everybody, my name is Brandon from thestocksnews.com, and today I want to talk about Alibaba Stock, ticker symbol BABA. What I want to do first is go into Google and talk about why Alibaba Stock is dropping 15% in a single month. And then I want to talk about how Alibaba Stock is doing as a business by going into the earnings report. And then I want to go into the trading charts to see if there's a level or two to buy Alibaba if we want to buy Alibaba. So now let's get started. So here we are in Google, and here's a 1 month view of Alibaba's stock chart here. And as we can see, in about a month, we are down about 15%. So the question is, why is one of China's best companies down 15% in a month? So if we scroll down here and look at the news, we see that a lot of people are talking about Chinese regulators putting a ceiling on the big tech companies like Alibaba through regulation. So if we take a look into this Wall Street Journal article here, we see that Alibaba has been under regulatory scrutiny because of its xuan policy, which translates from Mandarin to two choose one. This was where Alibaba was persuading merchants with a very heavy hand to only sell their products on Alibaba's platform and not on any other competitor's platform like JD.com. I believe this is one of the main arguments that regulators have against Alibaba at the moment, but that is not the only thing that Alibaba is doing to test regulators. We also can't forget to talk about Ant Financial, which is something that really has had an impact on the stock price just a couple months ago. Just a quick recap. Jack Ma invested in Ant Financial and wanted to bring it public, but then Jack Ma said some stuff about the government, and then the government came in and stopped the IPO. But last week, Simon Hu, the former CEO of Ant Financial, resigned, and to my knowledge, that wasn't really expected. So after covering these two stories, I want to give you my opinions on them. Firstly, the xuan policy where Alibaba was punishing merchants who sold on other competitors' platforms without doing too much research on the topic, that definitely smells like anti-competitive behavior to me. And I think that the regulators do have a good cause to look into the claim. Also, there is talk about a $1 billion USD fine against Alibaba because of their practices. And honestly, that fine is kind of laughable. These guys have a market cap of 627 billion USD, and they have a net income of 11 billion USD every 3 months. So, for these guys, a 1 billion USD is kind of like a speeding ticket. It hurts the pride more than the wallet. Now, my opinions on Ant Financial and IPO being stopped. So, firstly, I don't believe it was stopped because of the fundamental business model. I think it was stopped because, Jack Ma spoke a little too loud. That said, from what I've heard, I do think that the business model of Ant Financial needed a second look from regulators. However, if the main reason to halt the IPO was the business fundamentals of Ant Financial, then they should have stopped it well before common investors were bidding on the stock in China. If you want to invest in Alibaba, these are really the things that you should be thinking about before you invest in Baba stock. Much of the future around these regulatory risks are definitely not in the hands of Baba at all. And because of that, investors are carrying on extra risk. I am certainly not a fan of overregulation in the markets because every time you make a rule, you make tens of loopholes for the big guys to exploit to gain an even more competitive advantage against the little guys. That said, if a company is actively trying to squash its competition through immoral business practices, then that is the jobs of the regulators to handle the issues. The last quick point I want to make about the macro picture of Alibaba is the international relations with the United States. Again, as always, this is not a political show, but the point is that even though President Biden is in the White House, there is still a dance going on between Beijing and Washington. There will be moments when both people step on each other's shoes, either by accident or on purpose, and those politics will trickle down and affect Alibaba's stock price. As an investor in Alibaba or Chinese stocks in general, you have to consider the risks before investing and know that there will be some times when the stock prices move because of political turbulence and it's not in the company's control. This is not just specific to Alibaba stock, but it's really something you have to consider if you are planning to invest in emerging markets. So after talking about the macro picture and how that's affecting Alibaba stock, now let's head on over into the earnings report so we can see exactly how Alibaba itself is doing as a business. So here we are in Alibaba's earnings report, and firstly, if we look at the bottom line total revenues here, we see that we are growing total revenues by 37% year over year, and that is an incredible growth rate for any company, but especially for one that is as large as Alibaba. If we take a look deeper into the details here, we see that we are splitting up revenues into the core commerce section as well as the other avenues of revenues. I've said this in my last Alibaba video, but the diversification of their business is really impressive to me, and it's one of the reasons why I like Alibaba stock. Specifically, let's take a look at the growth rate of the cloud computing sector. We see that year over year, we are increasing that sector by 50% year over year. Again, I've said this before, but I do believe that cloud computing will be the future. Data is the new oil, and in order to process and analyze our data, we need strong cloud computing networks. In my opinion, I think Baba is incredibly vertically integrated on the data side of things. The reason for this is because they gain data from all of this core commerce. All of this core commerce, when people buy stuff, they get that data, and then they are able to analyze their own data through this cloud computing section here. So by doing this and being able to analyze their own data, they apply their own findings to gain more customers, which in turn increases this core commerce and then increases the overall revenue for the business. It is a very powerful positive feedback loop that I think will continue to push Alibaba further. Also, I just want to talk quickly about the costs here. If we take a look at the costs section of the earnings report, which I pulled up here, we see if we look down here at the total costs of operations, excluding share-based compensation, or just the amount of money that's really leaving Alibaba, we see that we are only increasing these total costs and expenses by only 3% year over year, even though we are increasing our revenues by 37% year over year. What that's telling me is that Alibaba is working incredibly efficiently, and if they continue to scale up their operations, they will be able to continue operating efficiently. The last thing I want to talk about in the fundamentals section of this video is the valuation of Alibaba. We are only sitting around the 26 price to earnings ratio with Baba, while compared to competitors like Amazon, we are sitting at a 73 price to earnings ratio. Because Baba has a much lower PE ratio than Amazon, that could indicate that Baba is at an extreme discount to companies like Amazon. But again, if you see something cheap in the stock market, especially big companies like Alibaba, there are always reasons why that is. We are in the rising interest rate environment, which affects high growth stocks and emerging market stocks, both of which describe Alibaba. Alibaba also carries regulatory risks, which I talked about in the previous part of the video. Amazon also carries regulatory risks. However, Alibaba also carries international relations risk with the United States. Again, you have to do your own risk-reward analysis before you invest in Alibaba. You have to think about all these things before you put money to work. So after talking about the fundamentals of Alibaba, let's head on over to the trading charts to see if there's a level or two to buy Alibaba if we want to buy Alibaba. So here we are in Alibaba's trading charts, and we can see that since its top in October and November, we've been really volatile ever since. So firstly, looking for support and resistance levels, the nearest support level that I see is around this $225 level made from the bottom of this candle, these candles over here, and we can see that the top of this candle was also the resistance of the $225 level back in June. So that's what I think is the closest support level to us at the moment. However, if we break this $225 support level, we could test these candles all the way down here, closer to the 210 and 220 mark. For resistance levels, I really see two levels of resistance. The first one here is this one around the $250 to $255 level. We can see that these candles over here, this candle over here, and these candles over here were all testing the support level before we broke down with conviction back in December. The next level that I see is this $270 level made from the tops of these candles over here, as well as the tops of these candles and the bottoms of these candles over here. We can see that because a lot of candles are either topping out like we are over here or bottoming out like we are over here around this $270 level, that is a place where the equilibrium of buyers and sellers can be a tipping point for the stock chart. So again, the question is, what will I do? Well, Alibaba is one of my core holdings in my portfolio, and I'm always looking to add more shares of Alibaba. The reason for that is because I believe in the fundamentals of the business and that the Chinese companies do have a long runway ahead of it. I think that Alibaba will perform fantastically over the next few years, even if there are short-term risks with regulation and international relations. Anytime the stock drops below this support level of 230, I am always happy to pick up a share or two. The other major indicators here, the MACD, which is a measure of momentum, is firmly in the negative, which is a bearish sign and could indicate that there could be more downside in the stock. And also the RSI, which is also a measure of momentum, you can see that it is rolling over here. So again, a bearish sign that could indicate that BABA is in for some downside in the short term. So that was my review on Alibaba stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.